Hey everyone, and welcome to this explainer. Today, we're breaking down something super exciting for all you focused learners and potential investors out there. We're unpacking the 2025 financial results for Regal Rexnord. Now, if you track the industrial sector, you probably already know these guys. They're the masterminds behind the systems that power, transmit, and control motion all over the world. But today, well, we're going to see how they've engineered something maybe even more impressive. A perfectly tuned machine for durable, high-margin financial growth. So let me throw this question out there to kick things off. What does a genuinely successful industrial transformation actually look like? Over the next 8 minutes or so, we're going to use data straight from their latest annual report and earnings calls as a sort of masterclass to answer exactly that. We'll see how they took a traditional manufacturing footprint and morphed it into this incredibly powerful, honestly kind of beautiful industrial powerhouse. All right, let's dive right into our roadmap. First up, a transformed industrial portfolio. Then, breaking down 2025 results. Third, winning the AI data boom. Fourth, cash flow and debt reduction. And finally, 2026 guidance and new leadership. Okay, Chapter 1. A transformed industrial portfolio. For any potential investor, stability is absolutely crucial, right? Well, their geographic footprint acts as a massive anchor. A full 70% of total sales are concentrated right in North America, with Europe bringing in another 17%. What that does is create a highly stable revenue base that's pretty well insulated from volatile emerging markets. It gives them a rock-solid foundation to build everything else on. And they use that regional stability to fuel a seriously powerful growth strategy. See, they aren't just selling individual parts anymore. They're providing fully integrated subsystems. This puts them in the perfect position to ride massive secular tailwinds. Think AI infrastructure, aerospace, robotics, medical precision tools. And for investors, check out this metric. In Q1 2026, cross-selling jumped by an astonishing 34%. They literally hit their $250 million cross-sell target a full year early. They're locking in customers because they're solving whole problems, not just pushing individual widgets. Moving right along to Section 2, breaking down 2025 results. So the absolute bottom line up front, it's their phenomenal adjusted gross margin for 2025, sitting at 37.8%. In the heavy industrial manufacturing world, brushing up against a 38% margin is just staggering. No joke, it easily puts Regal Rexnord into the top quartile of industrial companies. It proves that the value customers get from these highly engineered, integrated solutions translates directly into major premium pricing power. Let's quickly walk through this sparkling Q4 report card to see how that margin actually flows down. They posted sales of $1.52 billion, which is up 4.3% year over year, along with organic growth of 2.9%. But whoa, get a load of that net income. GAAP net income shot up a massive 51.9% to $63.8 million. Throw in an adjusted EBITDA of $328.5 million and an adjusted diluted EPS of $2.51 for the quarter, and it is crystal clear. This portfolio transformation is translating directly into expanding margins and incredibly robust earnings. Which brings us to part 3, winning the AI data boom. Now, we hear a lot about the AI boom these days, but what does the physical infrastructure actually look like? Well, it looks like the modular ePod. It's a custom, scalable, turnkey electrical and thermal management solution. Data centers need intense power and intense cooling to run all those AI servers. And this highly technical pod helps customers drastically speed up the pace of their data center construction. And how did the market respond to the ePod? Absolutely massively. Just think about the orders booked in 2025 alone, a staggering $735 million. They exited the year with a really sizable bid pipeline across all their data center products, which just proves their absolute dominance in capturing this AI-driven demand. Like their CEO pointed out, this business has the potential to accelerate their enterprise sales growth rates for the foreseeable future. All right, Section 4, cash flow and debt reduction. Growth is fantastic, obviously, but for savvy investors, the balance sheet matters just as much. And wow, is this one disciplined. Regal Rexnord hauled in a massive $893.1 million in adjusted free cash flow for the year. That's powered by $990.8 million of cash from operating activities. So they aren't just booking sales, they're converting those sales beautifully into cold, hard cash. So what exactly did they do with all that cash? They went all in on strategic de-risking. They aggressively paid down $709.4 million of gross debt in 2025 alone. That lowered their net debt to adjusted EBITDA ratio down to about 3.1 times. Add in their dynamic de-risking of pension plans, which basically means adjusting investments to correlate tightly with plan liabilities, and you've got a management team totally focused on de-risking the enterprise. It makes it a much safer, far sturdier bet for potential investors. Now, let's be totally transparent and review their historical total shareholder return against the broader indices. If you invested $100 in 2021, by the end of 2025, Regal Rexnord sat at $125.69. So yes, that trailed both the S&P Midcap 400 and the S&P 400 Industrials over that specific window. But here is exactly why this is such an interesting setup for potential investors right now. The heavy lifting of the transformation, that massive debt paydown, and the shift to high-margin secular markets, all of that has just been completed. The stock hasn't fully priced in this newly created cash-generating machine yet, setting the stage for why 2026 really represents a major inflection point for value creation. And finally, Section 5, 2026 Guidance in New Leadership. Heading into the new year, they are riding high on confidence. They're guiding for an adjusted diluted EPS of $10.20 to $11.00 per share. That represents a really robust 10% growth at the midpoint, which is kind of incredible when you consider management believes a lot of their traditional industrial end markets are actually sitting at trough levels right now. Plus, they just declared a steady Q1 2026 dividend of 35 cents per share, so you get a nice little income bonus while you wait for the capital appreciation. A major part of 2026 is a changing of the guard. Louis Pinkham is stepping down after 7 incredible years as the chief architect of this durable portfolio transformation. Incoming CEO Amir Paul is taking the helm by July 1st, 2026. For investors, let me tell you, this is exactly what you want to see. It's a smooth, planned handover where the new CEO inherits an incredibly healthy, de-risked, and accelerating business. This is absolutely not a turnaround project. So, we'll wrap up this explainer with a somewhat provocative thought. With margins already expanding into the top quartile, a massive foothold in the AI data center boom, and a new CEO taking the wheel of a beautifully de-risked balance sheet, is Regal Rexnord's transformation actually just getting started? It certainly leaves us super eager to watch them power, transmit, and control motion into a very profitable tomorrow. Thank you so much for joining me today, and definitely keep your eyes on those numbers.